China's trade surplus has soared past $1 trillion, a 20-fold increase in just 2 decades. This isn't just a number, it's a seismic shift in global economics, drawing worldwide attention. China's surplus keeps growing, defying predictions and fueling debates among economists and policymakers. The latest figures show exports vastly outpacing imports, reshaping global trade dynamics. At the heart of this success, strategic economic policies, world-class manufacturing, and a finely tuned export infrastructure. The big question: how has China managed to reach and sustain such extraordinary trade surplus levels? A trade surplus means a country exports more than it imports. Simple math, but with big consequences. For China, the scale is exceptional, reflecting a powerful export engine that's weathered global slowdowns. Unlike most countries, China's surplus keeps expanding, thanks to strategic planning and industrial growth. This surplus lets China build foreign reserves, stabilize its currency, and invest globally. The government backs export-focused industries and controls imports with tariffs and quotas. These policies keep the domestic market strong and globally competitive. By maintaining a high surplus, China cements its economic and geopolitical influence worldwide. China's economic scale underpins its export dominance. As the world's second-largest economy, China leverages vast resources and a skilled workforce to lead in manufacturing. Heavy investment in R&D keeps Chinese industries at the technological forefront, especially in electronics and machinery. Low production costs and efficient supply chains make Chinese goods globally competitive. Government subsidies and incentives further boost export strength. Major ports like Shanghai and Shenzhen ensure fast, reliable, global shipping. This logistical edge keeps China's exports flowing and its surplus growing. China's trade surplus is staggering, both in size and as a share of GDP. Compared to Japan and Germany, longtime surplus leaders, China's growth is unmatched. While Japan and Germany focus on high-value exports, China's surplus is fueled by a diverse range of products. This adaptability and market reach set China apart. Even amid global competition, China's surplus continues to outpace rivals. The result: China stands as a unique force, shaping the future of global trade. Its economic strategy is now a model and a challenge for other nations. China's trade surplus isn't just about exports. Lower imports play a big role too. The government promotes domestic industries, reducing reliance on foreign goods. A carefully managed currency keeps imports expensive and exports attractive. Consumer spending is directed toward local products, boosted by incentives and national pride. Demand for foreign goods remains limited compared to domestic alternatives. Strategic trade policies, tariffs, quotas and regulations further restrict imports. These measures align with China's broader economic goals. By controlling imports, China sustains a robust, long-term trade surplus. This approach ensures the surplus remains a pillar of China's economic strength. U.S. tariffs aim to shrink China's surplus, but China adapted quickly. By redirecting exports to new markets and using third-country transshipments, China blunted the impact. Its vast trade network and logistics made this pivot possible. Diversifying export destinations kept trade volumes steady despite tariffs. These strategies highlight China's resilience and resourcefulness in global trade. Even under pressure, China's surplus continued to grow. Can China's massive trade surplus last? Some experts say yes, citing China's strong industrial base and innovation. Others warn of risks, global slowdowns, protectionism, and the need to boost domestic consumption. As China shifts toward a consumption-driven economy, balancing exports and internal demand is key. A persistent surplus could spark global trade tensions and imbalances. The future of China's surplus will shape not just its own economy, but the world's. China's record surplus is reshaping the global economic landscape. Its ability to adapt and grow amid challenges sets the tone for future trade. As China evolves, balancing exports with domestic growth will be crucial. The ripple effects will influence global trade patterns and economic relationships. Ultimately, China's surplus is more than a statistic. It's a force shaping the future of global trade.